The Property Bulletin by London Property, the home of superprime.
Wealthy American buyers are increasingly purchasing prime properties in the UK, particularly in London, regardless of the political landscape. Their interest in British real estate is unaffected by changes in tax regimes or political figures like Rishi Sunak or Keir Starmer. Recently, British comedian Simon Brodkin went viral by asking New Yorkers about Sunak, receiving responses indicating little recognition of the UK Prime Minister. This humorous incident underscores the broader trend. Wealthy Americans may not know much about UK politics, but they have a strong interest in British properties. Celebrities like Taylor Swift, Tom Cruise, and Ellen DeGeneres are reportedly eyeing or renting homes in desirable locations, such as the Cotswolds and Soho farmhouse. According to Beecham Estates, Americans purchased 40% of London homes valued at £15 million or more last year, spending over £500 million. They are primarily interested in traditional and luxurious properties in areas like Belgravia, which features iconic stucco facades. Despite the UK's high inheritance tax and the Conservative government's phasing out of the non-dom status, American buyers remain undeterred, often paying in cash. US buyers are less concerned with UK tax policy since they are already taxed worldwide. They appreciate the quality and craftsmanship of London properties, which they find superior to those in California or New York. This year alone, Americans have spent £150 million on London real estate, undeterred by potential tax increases under a Labour government. Many American buyers are tech and finance professionals from the Pacific West Coast, seeking pied-à-terre or holiday homes in upscale London neighbourhoods like Kensington and Chelsea. They enjoy the city's cultural offerings and its proximity to other European destinations. They value London as a base for exploring Europe, which they see as a significant advantage. Historically, American buyers have favoured period houses with character, but there is now growing interest in new builds due to limited availability in prime areas like Mayfair, Chelsea and Belgravia. For example, a 3-bedroom penthouse in St John's Wood, designed to appeal to US buyers, is listed for £7.75 million. US buyers also appreciate the quality of English schools, prompting purchases in family-friendly areas like Notting Hill. Estate agents like Peter Wetherall have noticed a growing focus on marketing London properties to American buyers, with developers spending heavily on advertising in the US and organising roadshows in cities like Manhattan, Miami and Chicago. American interest is also extending beyond London to regions like Surrey and the Cotswolds, where private estates and high-quality international schools are significant draws. Despite potential political changes in both the UK and the US, American buyers continue to see London as a desirable and strategic location for investment, lifestyle and education. Their focus remains on the quality of life and property rather than the political climate. Private banks and advisors to Britain's super-rich warn that some clients may leave the country if Labour wins the upcoming election and implements plans to eliminate tax protections on offshore wealth intended for inheritance. Labour's proposals, which they claim will fund public spending on services like schools and the NHS, include faster abolition of non-dom status and expanding inheritance tax to cover foreign assets and trusts. Currently, around 70,000 people in Britain who pay little to no tax on overseas earnings face higher bills as the Conservative government phases out non-dom status. Labour plans to accelerate this process and broaden inheritance tax, which critics argue could harm the economy by making the UK less attractive to wealthy individuals and reducing overall tax revenues. Some wealthy individuals are already considering moving to countries with lower inheritance taxes, like Spain, Italy, Switzerland, Dubai and Singapore. The UK's high inheritance tax rate of 40% is a significant deterrent, especially for assets acquired before any UK connection. Labour also plans to reform how private equity investors' performance-related pay is taxed, potentially prompting international entrepreneurs and financiers to spend less time in the UK. Wealth managers report that many high-net-worth individuals are exploring ways to drop UK tax residency. Despite these concerns, some wealthy Britons, such as members of Patriotic Millionaires UK, support Labour's plans to close tax loopholes. They believe that most millionaires will remain in the UK despite the proposed tax changes. Overall, the proposed changes have created uncertainty, with some wealthy individuals and businesses considering reducing their UK exposure while waiting for detailed legislation. In the past 12 months, countryside property values in the UK have increased significantly compared to urban areas. The average price of rural homes rose by 1% to £300,000, while urban homes saw a 2.1% drop. East Cambridgeshire experienced the largest rural increase at 10.6%, while the City of London saw the biggest urban decline at 22.2%. Rural areas with the highest price increases include East Cambridgeshire up 10.6% and Northumberland up 7.5%. Urban areas with the biggest price drops include the City of London, down 22.2%, followed by Hammersmith and Fulham. The slowest drop has been Kensington and Chelsea, down 13.6%. Despite the fluctuations, some urban areas like Blaby in northeast Lincolnshire saw increases in property values. Rural living offers benefits such as better air quality and lower crime rates, contributing to the resilience of countryside property values. Lease renewals often prompt landlords to review terms, with environmental drafting being a common update driven by legal imperatives. The MEES regulations, 2015, require commercial buildings to have an EPC rating above F or G to be let after April 1, 2023, with non-compliance resulting in fines up to £150,000. Future requirements, such as reaching EPC rating C by 2028, remain uncertain and subject to government consultation. Landlords may include clauses allowing entry for improvement works, but this must be balanced to avoid unfair tenant disruption and loss of potential MEES exemptions. The quality of EPC assessments is crucial, and landlords often require approval of EPC assessors to avoid unwarranted downgrades. Prohibitions on alterations affecting EPC ratings are common, with debates on the significance of minor changes. Recent updates to EPC calculation methods, reflecting carbon emissions of primary fuel sources, have impacted ratings without physical changes to buildings. Modernising lease terms under the Landlord and Tenant Act 1954 requires justifying the reasonableness of changes, as seen in the Clipper Logistics case. Tenants face challenges in negotiating better environmental terms for their own ESG goals, with landlords often reluctant to share utility data or allow structural alterations for sustainability improvements. Each building's specific needs must be considered within broader corporate ESG policies. A major $1.8 billion legal case in the US has shaken the real estate industry, alleging fee price fixing among agents. The National Association of Realtors, NAR, and major brokers, including Keller Williams and Anywhere Real Estates, which operates Century 21 and Sotheby's International Realty in the UK, have paid substantial settlements. EXP Realty is still litigating, but has set aside $16 million for potential costs. The implications for UK estate agents are significant. The cost of these settlements may affect the UK operations of these companies, potentially limiting their investment in the UK. The case also raises questions about commission practices, which have traditionally been much higher in the US than in the UK. The NAR's influence, viewed akin to a powerful trade union, has been notably diminished by these legal outcomes. New US regulations are anticipated, and the fallout could see a reduction in the use of buyer's agents and changes to how digital agents are treated. Some realtors fear a significant drop in earnings and potential job losses. For UK agents, this serves as a reminder to justify their fees and value transparently. There is concern that similar issues of commission collusion could arise in the UK, attracting scrutiny and fines from the Competition and Markets Authority. This case underscores the need for estate agents to demonstrate their value and maintain transparent practices.
Subscribe to our newsletter to receive our weekly bulletins and stay ahead of what's shaping the super prime property market.